big focus area for the day. For the market overall, the mid-cap index is up about 0.3%, but the rest of the market at the moment is under a tad bit of pressure. But let's talk to Fusion Microfinance. We have Devesh Sachdev, who's the Managing Director and Chief Executive Officer of Fusion Microfinance, that joins in now. Mr. Sachdev, thanks a lot for joining in. If you can just start by telling us a little bit about how your quarter has panned out. In Q2, your asset quality improved sharply, which was a very good thing. Can you tell us what is the outlook in the second half of the year, and on credit costs as well? What can we expect?
Yeah. Well, thank you, Sonia. Good morning. I think we have 2-3 major highlights for this quarter. The first highlight I want to like to mention here is the fact that our rating has got upgraded by CRISIL. It's very significant that in the last 11 months is the second rating upgrade. The second point is, which I want to highlight here, is the fact that how we have navigated this whole high interest rate environment. Our marginal cost of borrowing has actually shown a dip, which has really positively impacted our NIM. Our NIMs are hovering around 11.12, and we have been guiding that NIM will in Q3, Q4 will start reaching 11.2 to 11.5. So that is happening. And similarly, in our customer addition in this H1, we have added around 2.4 lakh new customers. So our calibrated approach of adding new customers, improving the NIM and the asset quality has continued, and we are getting a good support from all our even lenders. So our liability has been very, very robust in H1.
So what was the impact of the floods on your business in Q2, and has it hurt your growth? Earlier, what was the growth that you were anticipating in FY24, and what would that number now stand at?
Yeah. So yes, these unseasonal rains have impacted us, especially in some of our, out of our top 5 states, 3 were impacted because of the rains. Yes, we were slightly calibrated. If I slice the last quarter, the Q2, the overall disbursements were 2,344 crore. But if I dissect it further, close to 825 crore we have done in September. However, the October and September, our net run rate, average run rate is around 850 crore. So the growth is back. There was a temporary impact on both growth and asset quality, especially the initial buckets. And then we understand. I think we are very calibrated, and that's how we actually pivoted our whole operation around that. Now, I think that those pangs are out, and you will see better growth in H2.
All right. Hi, Mr. Sachdev. If you could give us a number, what kind of growth, AUM growth, we should look at for this year, that is for FY24, and from there on, FY25, what should it look like? And asset quality has improved, as you said, on a sequential basis, so good to see out there. Give us a couple of numbers on the gross and net NPAs.
Yeah. So, Nigel, look, on the growth, we have been guiding that after a certain base, look, we are now already at 10,000 crore AUM, more than 10,000 crore. We have been guiding that this year, the overall, it will be mid-20s. So similar, we are sticking to the same guidance. We will be growing to mid-20s in this financial year 24. Our gross NPA is now around 2.68. You will see this also going down because we have changed our provisioning write-off policy. Even the net NPA is down to 0.65. So you will see a similar trajectory in terms of growth and improvement in some of these numbers in the next 2 quarters.
So can you tell us on the loan growth, have you revised the guidance or have you not? And what is the loan growth for the full year, FY24 and 25 that you're looking at?
Yeah, we have not revised our loan growth. What we have been guiding, since we came to the street in year 2022, that we will be either anywhere between mid-20s or at least equal or more than the sector growth. So we have not changed any such guidance. Our guidance, we are sticking to that same guidance even in this financial year. As far as we are trying to be a more long-term approach. We will, in the next, maybe Q4 or Q1 of next financial year, we'll give a overall guidance on some of these numbers across cycles, across 3 to 5 years. We are, as a company, we want everyone to look at us more from a long-term perspective rather than boxing us in a quarter on quarter. I think that's our approach has been, and we have very consistent performance. If you see,
Got it.
even terms of our numbers also, we have been very, very consistent.
Okay, so we'll leave it at that. Thanks a lot for joining in. That, by the way, is